In this video, we are going to talk about how to make money to invest in stocks. So before starting this video, please like this video and subscribe to our channel for the future updates. Here's a list of the top 5 ways to make money to invest in stocks. Let's start. Number 5. Play the stock market. It is not for the faint of heart to engage in day trading. It takes tenacity and perseverance. It necessitates an awareness of the many market dynamics at work. This isn't a project for the inexperienced. However, if learned properly, it is a method to swiftly generate a big amount of money with a relatively small investment in a matter of hours. When it comes to stock market trading, there are also techniques to hedge your chances. Whether you're trading the stock market or penny stocks, be sure you set stop-loss limits to reduce the potential for severe losses. If you're an experienced trader, you're probably aware that market makers frequently manipulate stocks to exploit our fear of failure or our greed. And they'll frequently drive a stock down to a specific price to amplify that anxiety and profit from it. This is much more accentuated when it comes to penny stocks. As a result, you must know what you're doing and be able to comprehend market factors in order to make large profits. Keep an eye on moving averages. When equities break through 200-day moving averages, there's either a lot of upside or a lot of downside. Number 4. Choose the right investment account. Though the investments you choose are unquestionably significant to your long-term investing success, the account in which you keep them is equally critical. This is because some investment accounts provide you with tax benefits such as immediate tax deductions, conventional retirement accounts, or eventual tax-free withdrawals, Roth. Regardless of which option you choose, you will be able to avoid paying taxes on any profits or income you earn while the funds are in the account. This can help you boost your retirement savings by deferring taxes on positive returns for decades. However, these advantages come at a price. To summarize, you must invest in the correct account to maximize your profits. Taxable accounts may be a smart place to keep investments that lose less of their returns to taxes, or money that you may need in the next years or decade. Investing in tax-advantaged accounts, on the other hand, may be better suited for investments that are likely to lose more of their returns to taxes or that you want to retain for a long time. Number 3. Reinvest your dividends. Many companies pay their shareholders a dividend, which is a recurring payment depending on their profits. While the little sums you receive in dividends may appear insignificant at first, they are responsible for a significant share of the stock market's historic growth. The S&P 500 had an average annual return of 6.7% from September 1921 to September 2021. However, when dividends were reinvested, the proportion increased to nearly 11%. That's because reinvesting your dividends buys you more stock, allowing your earnings to compound even faster. Because of the increased compounding, many financial consultants advise long-term investors to reinvest their earnings rather than spending them as soon as they are received. By enrolling in a dividend reinvestment program, or DRIP, most brokerage firms allow you to reinvest your dividends automatically. Number 2. Opt for funds over individual stocks. Diversification, a tried and true investing strategy for lowering risk and potentially increasing returns over time, is well known among seasoned investors. Consider it the equivalent of not placing all of your eggs in one basket when it comes to investing. Although most investors choose individual stocks or stock funds such as mutual funds or exchange-traded funds, ETFs, experts normally advocate the latter to maximize diversification. While you can buy a variety of individual stocks to mimic the diversification found in mutual funds, doing so successfully takes time, a fair degree of investing expertise, and a large capital investment. A single share of stock, for example, can be worth hundreds of dollars. Funds, on the other hand, allow you to buy a single share of exposure to hundreds, or thousands, of distinct investments. Number 1. Buy and hold. Long-term investors have a saying that time in the market beats timing the market. What exactly does that imply? In brief, one common technique to make money in stocks is to use a buy and hold strategy. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.